Norwegian manufacturing output surged to a record high in the second quarter, moving firmly past levels last seen before the global financial crisis, as the booming oil industry keeps the economy on pace for solid growth. I'm Monica Gibson, and I'm joined down the line by Harald-Magnus Andreassen to discuss his outlook for the Norwegian economy. Now, manufacturing is driven by oil and oil services, but often at the expense of traditional industries, which are suffering from a decline in its European markets. Is it fair to say that Norway has a two-speed manufacturing sector, and is the disparity enough to cause a drag on the economy?
Sure, we've got a two-speed manufacturing sector in the sense that the oil sector is increasing its investments rapidly, and that gives good support for that part of the manufacturing sector that are delivering goods and services to the oil sector. And of course, the rest of the manufacturing sector is weaker, but it's not weaker than, let's say, the European average. In fact, it's quite close to what we have seen in the average in the European Union. So it's not strong, but it's not that weak either.
Later in the week, investors will also be on the lookout for Norwegian core inflation data due out on Friday. The current inflation rate is a long way off central bank targets, but do you believe it is sufficient to warrant central bank action?
Well, inflation is low in Norway, as in many other countries. The core inflation rate is now between 1 and 1.5%. The central bank has an inflation target at 2.5%, but the bank is not eager to get inflation up. So it has accepted that inflation will be kept below 2.5%, at least at the forecast, until 2017. Of course, the bank could have conducted a more expansionary monetary policy by cutting rates further down from the 1.5 we have at present as a single rate. But they had as a trade-off versus stability in the economy and versus stability in the financial market and the housing market, and the bank has decided to stay put at 1.5%, even though inflation is way below target.
Ahead of the country's September 9th election, the debate over whether Norway's housing market is in the grip of a bubble is now splitting the nation, as a rally in home prices has ebbed. Is this merely political posturing? How real are the risks of our overheating property markets?
Well, I don't think it's much of a political debate or focus, but my assessment is that the house prices are far above long-term level that's needed to produce enough housing in Norway. We have seen strong growth in house prices versus income, and of course debt ratios have increased at the same speed. So it has many of the typical signs of a housing bubble. House prices have stabilized so far this year, and there are some signs of weakness in parts of the market. That might be temporary, but my guesstimate is that house prices in Norway are lower in 5 years' time than they are now.
Traders looking for less exposure to major currencies might want to consider the Scandies. Some analysts believe we could see a knocky stocky upside towards the end of the year. But what are your forecasts for this pair and for the Norwegian krone in general?
Well, first of all, the Norwegian currency has weakened substantially versus most currencies over the last 6 months. Versus the euro, at the trough at the beginning of the summer, the Norwegian krone was down almost 9% versus the euro, and the reason was that raw material countries were less in favor. Some people are worried that oil and gas markets are getting somewhat weaker. The gas prices are under pressure due to shale gas exports or coal exports from the U.S. due to the gas revolution going on there, pushing down gas prices in Europe. Versus the Swedish krona, the Norwegian krona has depreciated too, and I think it has now fallen enough. So it's short-term some upside versus the Swedish krona rather than the downside, I guess.
Harald-Magnus, thank you so much for your time and insights today. Well, viewers, for a look at the Chinese economy and the yuan with my colleague Dermot McDermott, click back to the website. But for me and for now, goodbye.